Welcome to Subramani. On tax loss harvesting, I've done 2 video posts, so I'll do the third one. This is more to clarify some of the questions which people had asked. For which I have an answer, some for some I may not have an answer. So is it really tax saving? The answer is no, it is a tax postponement. But suppose in this year you have lot of capital gains already, then this can be used tax loss harvesting. Please see the earlier 2 videos on this where I've spoken about it. If you don't follow the sequence, if you don't know what is tax loss harvesting, you won't know what I'm saying. So if you have capital gains already and you're sitting on book losses, right? It is not that you will make a loss just to set off, right? So if you're sitting on loss, you bought a share at 100 rupees, now the price has gone down to 70 and you think it is worth keeping. Please understand, that's very important. Otherwise you're just booking your losses, which is just means that you bought it at 100, you had a stop loss of 30%, so at 70 rupees you think you should sell off. That is a regular transaction. Here I am talking about a transaction where you bought the share at 100 rupees, the price is now down to 70 rupees and you think you are going to hold it on for a long period of time. Then I'm just saying, therefore you are booking the loss. So you sell it at 70 rupees and buy it back at 70 rupees. Now look at it this way. What is happening is, instead of keeping the losses on your book and not taking the tax benefit, you're not doing yourself a favor, because that loss is anyway there. It is a real loss. You're just acknowledging the loss and saying, I still think it is worth buying at 70, so you're still keeping it at 70. Take a fresh decision based on your understanding of that investment. I am not saying therefore you should sell and buy back. No, if you think it's worth selling, sell it off. However, if you are going to hold, then it makes sense for you to sell it off at 70 and buy it back at 70. Now, in theory, it is a good deal, but in practically speaking, there will be transaction cost. There will be brokerage, there will be STT on brokerage, right? So, and there will be differential pricing risk which you are taking. Suppose you sell it at 70 and when you go to buy back, the price is already 71 and you still want to hold on, then you find the price going to 72 and 73. You're afraid, and here we are purely doing a tax loss harvesting. You don't want a price arbitrage or something. You're not trying to buy it back at 68. So you sell and you buy almost simultaneously, so that there is no price risk. Of course, if you want to take the price risk, you sell it at 70 and wait, and maybe tomorrow you'll get it at 67 or 68, then you make some extra money. But otherwise, the 70 rupees sale and the 70 rupees purchase would still mean about 2.25% kind of a differential that you pay because of the buying brokerage and the selling brokerage, assuming that it is a share which is trading enough volume so that you get it, you are able to buy and sell at the same price. Of course, if you are able to sell at if you're able to sell at 72 and buy it at 69 or something, you're making some money also, and you're which is very technical, because you're on a FIFO basis. You will first get the 30 rupees loss that you will book, and your cost of holding will go down. So next year, maybe you sell it off and make long-term capital gain. After 2 years, you sell it and make long-term capital gain. However, please understand, this arbitrage between short-term capital gain and long-term capital gain is only 5%. Right, so 15% is the tax on short-term capital gain and 10% is the tax on long-term capital gain. So it's not really too much. You have only 5% to play with, and within that, if there is a 2% brokerage and transaction cost, altogether is about 2.5%. You are left with just 2.5%. Then you have to think, is it worth doing it at all? Second, understand that you can't permanently keep on saying, I will not pay tax. You have to pay tax at some stage in your life. Assuming that you don't need the money and you leave it to your children will pay tax on a basis that you are holding it for a long period of time. But they will still pay tax. And believe me, the tax rate on long-term capital gain is draconian, right? 10% without indexation is huge. So hopefully tomorrow, if indexation is allowed, and even if the rates go up from 10 to 15%, it's not something to complain about. You might still be better off in a country with 7-8% kind of inflation, right? So it is clearly a tax postponement. It is not really, you are not trying to save tax. There is no such thing called saving tax. You cannot set off your dividends or anything against these losses. Losses are there, and losses can be set off against gains. So you have short-term capital gain, short-term capital, then you can set off it again, set it off against short-term capital. You can use the short-term capital loss to set off against short-term capital gain. And if you have long-term capital gain, you can book some long-term losses and set it off against long-term capital gain, and therefore you will save some tax. The tax loss harvesting used to be very attractive at a time when short-term capital gain tax was 20% and long-term capital gains tax was 0, right? So there was a 20% arbitrage available. Today it is only 5% minus transaction cost. So it's not a very big amount. It is not very great, very attractive. One more question which people asked is, if I sell in one brokerage house, if I have two broking accounts, so if I sell in one broking account and if I buy in another broking account, what will be applicable as FIFO? I think the transactions are tracked to your PAN and not to your brokerage account. So if you have, let's say you have a bank account with 3 banks, savings bank account, all the interest is picked up by the income tax department. So exactly like that, all these transactions will be tracked to your PAN number. But I seriously do not know if you have say you bought in BSE and sold in NSE in different accounts. I do not know on what basis the data is being picked and how FIFO will work. Let's say you bought it on Bombay Stock Exchange and you're selling it on the National Stock Exchange, which today is possible. Then how it works, I really don't know, but I think that should also look like tax loss harvesting only. It will not be two separate delivery things, but on the same day, if you buy and sell, there's a good chance that it will be called a speculative gain. So let's say you bought it at 70, sold it at 70, then it does not bother you. But if you bought it at 70 and sold it, suppose you sold it at 72 and you bought it at 70, then this will be treated as a separate transaction and you will be taxed on that 2 rupees. So that set off which you wanted, you may not get. So I would think if you can, you should take the price change risk. You should sell it on Monday and buy it on a Tuesday, which means don't buy and sell on the same day and run the risk of it being called speculative income. I don't deal with 2 bank accounts. I mean, I don't deal with 2 demat accounts. I have only one demat account which is active, so I do not know this problem, but maybe some chartered accountant or some broker will be able to clarify. In my head, because it's all tracked to your PAN number, I think it will be still treated as speculative income even if you buy in one exchange and sell in another exchange. And please also remember, settlement will not be very easy unless you are sitting with lot of shares. Let us say you got 5,000 shares in your demat account in the BSE and 5,000 shares you got in the demat account in the NSE. Then it is possible that you sell it on BSE and buy on NSE because you have delivery on both sides. But otherwise you have to worry about quantity and you can't do inter-exchange. You cannot buy on BSE and sell on NSE on the same day, right? You can't do that. You can sell on NSE and buy on BSE provided you have money, that is different, but you may not have the share. So be careful about what you're doing, and I think logic says that even if you buy it on different demat accounts or sell in different demat accounts, because it is tracked to your PAN, the AIR will have it, and therefore it will be treated as speculative gain. I would think you better wait, buy and sell on different dates rather than I mean, maybe wait a day and take the price change risk if you want to do it. But please understand, overall it's only a 5% game minus transaction costs. So if your transaction costs are, let's say, 1%, then the whole thing comes down to 2.5%. Now 2.5% on 1 lakh thing means just 2,500 rupees. So just think about whether you want to do it and how. Thank you.